Hey everybody, Chris Wittich here, tax partner with Boyum Barenscheer. Just wanted to talk about the CARES Act and some of the individual tax provisions that are part of that bill. It passed the Senate, it's probably going to pass the House today, and we'd expect it to be signed. So what are some of the individual things in that bill? Well, the biggest one is the stimulus check. I've done a separate video about that. That's sort of its own thing. That's complicated enough on its own. But there are other individual tax provisions that are part of this bill. One of them is about qualified retirement plans. So one of the unique things that they're allowing is for distributions of up to $100,000 for like coronavirus related expenses to happen from your qualified retirement plan in 2020, and there will be no penalty. So if you're not old enough, there's a penalty typically when you take money out of your like your 401k or your IRA. And so there's no penalty if you take it out and it's related to, and they have a long list of what sort of are eligible costs, but it's the kinds of things that they would make sense when your income goes down because you're caring for a relative or because you're sick yourself or you lost your job or things like that, paying for medical bills. Stuff like that qualifies as sort of coronavirus related expenses. So up to $100,000 can be withdrawn from your account and there's no penalty. That's nice. But better than that is you get a 3-year spread on this income. So normally when you take money out, it's taxed in the year that's received. This time, if it's a coronavirus related expense up to $100,000, 1/3 of the income will show up in your 2020 return, 1/3 of the income in 2021, and then 1/3 of the income will show up in 2022. So that's very unique and allows you to sort of spread out that income. And once again, there's going to be no penalty on any of that, which is great. One of the other unique aspects of this is that sometimes people have sort of a short-term need for cash, especially if you're out of work or business is really hurting. So they allow for this distribution of $100,000. They're also allowing you to pay it back. So you can pay it back like later in the year and then not have to pay tax on it. It's counted as a rollover. So if you took out like $50,000 or $60,000 today, let's say, and then business is better and the economy is back on track by, say, September or October, and you don't have the need for that cash anymore, and you have the availability to put it back, and that would be a good tax situation for you, you can actually put it back later this year or anytime during the 3-year spread when you're picking up this income, and then you're not going to have to pay tax on it, so it'll count as a rollover. Normally, a rollover needs to be done very quickly, but in this case, they're going to count it as a rollover, even though maybe you held on to the money for several months, or maybe even a year, and then you put the money back. So you can avoid paying the income tax on it if you put the money back in. So that's a very unique opportunity for individuals who have qualified retirement plans. Something else that I thought was noteworthy was that 2020 year required minimum distributions are just canceled. You don't need to do it. So if you're like 75 years old and you've got a required minimum distribution going from your retirement plan accounts, and normally you do that later in the year, that's when a lot of people do them. Some people will do them like quarterly or monthly, but oftentimes people will wait till the end of the year to do that distribution. You can just skip it for 2020. Certainly, if you want to take the distribution, you still can. There's nothing prohibiting that. They're just saying that the required distributions for 2020 are waived. So that's an interesting bit of sort of flexibility for individual taxpayers. One of the other individual aspects of this tax bill that I thought was interesting and would have a broad application is that they are creating for 2020 and beyond, they're creating a new above the line tax deduction of $300 for cash contributions to public charities. So with the tax law that changed a couple of years ago, a lot of people now are not itemizing their deductions. And so they created this provision specifically for those people who are not itemizing. Those are the ones that are going to qualify. If you give $300 in cash to public charities, then you can deduct that above the line, as they say. So people that are claiming the standard deduction, they can also get this $300 deduction for making cash charitable contributions. I say cash because it does not permit you to count donations to a donor advised fund or private foundations or just donations of stock to charities, because there are other benefits you're getting for doing those things. So they're just looking at cash contributions you make during the year. So if you don't have enough to itemize, at least you can sort of get this $300. So that's going to be unique, and that does not expire. It's not just for 2020. It appears to be more of a permanent thing that they've put into the law to sort of encourage people to make charitable contributions, or at least to benefit from it if they are making those contributions. There are certainly some other individual tax changes. I think they're a little bit more narrow, but I'll just mention them real quick here. The loss limitations. There's some loss limitations where only 500,000 of losses could be claimed for married filing joint on businesses. That has been delayed and pushed out to 2021. So you don't need to worry about that. There's also a rule change with net operating losses for individuals, so that 18, 19, and 20, if you have a net operating loss, now you can carry it back 5 years and then carry it forward. In the past, you were only going to be allowed to carry those forward, and then it was only going to offset 80%. So a big change there if you have a large loss, or like in 2020, if you're going to incur a big loss, the idea is that you'll be able to carry that loss back. So there are a few other individual tax tidbits in this bill, and so I'd encourage you to read the rest of the post and really dive into those. But those are the ones that I think have a lot of broad application and really are going to apply to potentially a lot of individual taxpayers. So I think that's all for now. Probably do another one trying to dive into some of these business tax provisions that are more specific for businesses, either business owners or like self-employed folks who are running a business. So that's all for now. Thanks.